Hello traders, welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado and today we are going to check the euro-dollar trading plans and the S&P trading plans for this week. Here we have the euro, which has been trending down over the last weeks. When you are trading, you have two options when you are professionally trading. When there is a trend down, you can either buy the lows or sell the highs. That's the only thing you can do. So you are going to buy the lows, of course having a setup, not just because the price is there. So you're going to buy there, you're going to buy there, or you're going to sell here, you're going to sell here. So it depends on the bias that you have. If you think that the euro is going down, so you sell it at the upper area. So we can say that this band here, this area is for sells and this area is for buys. So in this case on the euro, if we want to sell it, we need to sell it at the extremes, right? We need to sell it here and we need to buy it here at this area. So the volume profile comes here to help us finding if we should sell or buy. It's not going to tell us where, when, or how, but is going to tell if we need to buy or sell. So at this area, traders, above the one standard deviation of the point of control, these are sell trades. Then you can add your magic. Say, okay, I like the rejection. I like the rejection. I like whatever you like, but this is the area that you only can look for sells. If you want to buy it, we actually trigger a trade last week at this area. We need to buy at the lows. So where we are right now, what do you think we should do? Remember that as traders, we have three options: buy, sell, or do nothing. Those are our three options. So here we can only buy, right? That's the only thing we can do. So we are not selling. So buying or doing nothing or just waiting, because we are not going to sell cheap. We're going to buy cheap and we're going to sell expensive. So the next step in this process, traders, is finding where we are going to buy it. So let's move to the hourly chart to create a specific trading plan for the week. So right here, we got this three-wave sequence. Today in the morning in the daily video, I was telling my clients that here, the only thing we can do is selling here or here, and the target, the previous low. So if for day trades, there are two entry points, entry 1 and entry 2 for selling, right? And for buying, traders, we are going to look for the completion of the 3, 4, 5 sequence, and then we're going to buy it at this rejection, because that's our bias. We're looking for buying the euro. We're looking for a leg up. And this is going to give you a huge edge, a great advantage, because when you execute, let's say that you are able to execute somewhere here, and this is your risk. So when the price reaches a 1-to-1 risk-reward ratio, you can book some partial profits, let's say 50% out of the trade. So you trigger here 20 contracts, or 10, or 5, or 2, or whatever number is your 1% of risk. And then when you reach 1-to-1, you take out 10, let's say 50%. So it's already a safe trade. If everything works as expected, and let's say that you are going to have a home run here, fantastic. What else can happen? That after reaching the 1-to-1, the price drops and continues, so you are at the break even. What else can happen? That the price triggers your trade without reaching the 1-to-1 and moves down, so you are losing 1%. And the other option is that the price breaks down and never returns, so you never trigger your trade and the price starts selling off for hundreds of points. And you didn't trigger your buy trade, so you are safe. You can see that the worst scenario is losing 1%. That the middle scenario on the active trade is a break-even. And the best scenario is a home run. And this is one of the key principles of successful trading. When you are losing something, when you are losing a trade, it's a small loss or a break even. And when you have the home run, not always is going to happen, but when it happens, enjoy it and ride it. You can make some good money. That's the process, traders. So cut losses quickly. Let the winners run. But in order to successfully perform this action that sounds so simple, but it requires other things like having a good execution, a small stop loss. Those sort of things that you need to master during the road. Then when you understand this logic of trading, everything is going to change for you. It's a detox from terrible habits in your trading. So when you understand the logic of the market is where you are going to start improving your trading really fast. Let's have a look at another example, the S&P. First of all, let me show you what we were working last week. This was a report that I shared with my clients. So last week, we were buying the S&P, entry 1, entry 2, entry 3, entry 4, entry 5. But because we have a huge advantage of execution, entry number 1, this is the risk. So 1 to 1, 1 to 2, probably 1 to 3. We have a successful trade even if this wasn't the low. Here the same. So another attempt. So 1 to 1, 1 to 2, probably 1 to 3. Great, enough to book some profits. Okay, it's not the home run, but it's a decent trade. And here we go again, entry number 3. 1 to 1, 1 to 2, 1 to 3, probably 1 to 4. Great. Here is the next one. So the execution was here, and 1 to 1 at least. And this day, on this report, we were looking for entry number 5. So we're going to check today what happened with that entry number 5 on the arrival market, and we're going to plan entry number 7. Okay, so let's work on this one. So entry number 6 was right here, right? That was the plan, and look, this beautiful setup. So we got all these points here. Then today the prices started to move down strongly, and we said, okay, if we are long from here, we already have a break even on the part of the trade on the fraction that is open, and if we have a rejection, we can buy it. And here it happened at the rejection, so this could be a buy trade. That didn't work. Okay, so we are losing here 1%, is fine. But then the price accelerates fast into the low, so it's telling that it's not ready, so this is entry number 7. Entry number 7, traders, is the actual trade, the live market trade, and it's going to be extremely simple. The buy stop is above this area. The protective stop loss below the low, so let's add 1 or 2 ticks, or probably a point, above the A. That's the risk, 1% or less of the account. Once it reaches 1 to 1, we will be safe. 1 to 2, 1 to 3, whatever. And probably here comes the home run. It's a matter of patience. I haven't seen an accumulation that has been extending and extending like this one on the S&P. It's a lot of extensions, but it's fine. If we execute at the right level, even if that's not the end of the wave, we are going to have an advantage. But of course, imagine the trader buying here, let's say, when the price makes a bullish breakout of the resistance and leaving a protective stop loss here. The stop is so huge that the trader doesn't have any advantage. And most of the retail techniques as moving average, crossovers, and that type of thing, most of them are going to trigger the trade extremely late. And late, okay, that's fine. If it works, it's good. But the big problem with the regular retail techniques is that you end with a huge stop loss. And in order to reach at least a 1-to-1 is crazy. But when you execute with a tiny stop loss, that's going to give you a huge advantage in terms of risk reward. So that's our approach, right? So let's see how it's going to play out this one. Now, let's suppose that someone is short on the S&P, because that's fine, There are different views. So, okay, that's good. But where are those sells? Here, 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 here. If the trader likes the setup. So remember, in a trending market, the upper area is for sells, the lower area is for buys, and the middle is for retails. For all those techniques, Bollinger Bands, moving average crossovers, MACDs, stochastics, whatever, if you check any of those techniques, are going to be somewhere here inside. And those are too late. The problem of being late to the party is the stop loss that becomes huge. But with this logic of the market, you know that when you are in these areas we just explained, here, the actual one, the only thing we can do is buying. The next question is when? How? Well, that's easy. We place a buy stop order here. That's the personal strategy. But that's the only thing we can do here at these areas with a small stop loss. You see the difference? So it doesn't matter what the direction the market goes at the end. Because we can have, if we are completely wrong, we're going to have a 1% loss. Because we need to leave a protective stop loss always. If we get the home run, we can make some good money. And that's it. You see how simple it is at the end? Of course, in order to improve your entries, in order to improve your execution, you need to have some good ground rules. You need to understand the market structure. You need to understand if it's a good idea or not to trigger the trade. You need to filter the trade with other concepts and other tools that we work on the membership and that you can learn really fast, because our training methodology is to teach you on the live markets. So traders, this is exciting, and if you want to change completely your trading forever, visit us on ElliottWaveStreet.com, and under the membership tab, you are going to find our plans. We have a special of $19 for new clients, $19 the first month, so you can trial for the whole month, just $19, the whole service, the educational courses that we have inside, the live market analysis Monday through Friday, the afternoon reports, a lot of things you're going to get inside the membership. You're going to love it. So you can access by selecting your plan, picking your plan, you sign up here and you will get immediate access, right? You can explore the whole page. And if you have questions, just let us know. Here on the top part of the website, you have the contact form, or you have the WhatsApp number or our email. All right, traders, please have a fantastic start of your week. I'll see you inside the membership. Take care. Bye-bye.